The news day continues here on One News Now. I'm Danny Laurel. Here are the biggest stories on the economic and corporate fronts. Fitch Ratings sees better profits for Philippine banks this year. Tama Febrian, a director at the firm's Asia Pacific banking team, said the sector's profitability will continue to improve in 2023. He cited rising interest rate margins as banks continue to reprice their loans, while funding costs are likely to remain controlled. Outstanding loans extended by universal and commercial banks climbed by 13.7% year-on-year to 10.64 trillion pesos in November of 2022. Exports contracted unexpectedly in the last month of 2022. Is this a one-off or an indication of some risks in the industry? Here to talk to us, we have with us Dan Lachica, President of the Semiconductor and Electronics Industries in the Philippines, or SAIPI. Good morning, Sir Dan. Welcome back.
Good morning, Danny, and good morning to your viewers.
Sir, just a reaction here on the trade figures that came out last week. So you've got exports contracting by 9.7% in the month of December when the expectation was actually closer to 10% growth. What was going on here, sir? Is this a one-off?
Well, as we've mentioned in the past, we don't really respond much to month-to-month variations.
Okay.
The thing is, what we're looking at is the outlook for the whole year. And December year-to-date, or for 2022, we actually reached the highest ever export level of $49.09 billion, which is about a little over 7% of growth beyond 2021.
Can you compare that to the pre-pandemic figures, sir? At what point have we caught up?
That's a good question. It's actually 13% higher than the pre-pandemic level of 43.3%.
Okay.
Of course, we suffered a setback in 2020. We kind of lost ground, something to the tune of about 9%. But 2021 recovered. 2022 obviously recovered as well. So that's where we are today.
Sir, I understand that you don't look at the month-on-month, but also the electronics exports, in that specific month, down 13.9% after expanding double digits, above 20% in November. Was there a specific issue in the month of December that caused this contraction?
Not really, because what typically happens is you will see a rise in November. Manufacturers trying to hit the Thanksgiving and Christmas sales. And so after that spike, you will see kind of like a leveling or tapering off in December, which is normal.
All right. And tell us, have we already felt the impact, or when will we start feeling the impact of the reopening of China? Are you able to give some visibility on that in terms of our own manufacturing sector?
We actually export about 30% of electronics products to China. And that really was hampered by COVID. And off and on, we've seen China reopening, and then, a slight bump again with some closures of the borders. So the supply chain has really been unstable. In fact, we're experiencing a lot of extremely high costs for logistics because of the interruption. Because interestingly enough, we import also a lot of raw materials from China.
Right.
So the industry, the sector has basically learned to live with this, but obviously would like to see stability and obviously from a cost perspective in the supply chain.
When do you see that happening this year? Is this going to be agile enough that the supply chain will go back to normal, especially with the lessening of the restrictions in China?
I doubt it, Danny. Just like, the tagline really is new normal, right? So even in the supply chain arena, we have to adjust to the new normal, and that is looking at alternate suppliers instead of just depending on China, higher logistics costs. And even we have an initiative in our industry to localize materials, so to minimize our dependence on imported materials. In fact, we've gained some traction on that to the tune of about 200 million pesos already localized, and we expect to continue with that initiative.
Sir, what about the demand side? Has this gone back to pre-pandemic levels despite the fact that you might be seeing not necessarily a global recession at this point, but still a softer landing for the global demand?
Well, 2020 essentially translated to a softening of demand as everybody globally was trying to figure out how to respond to this global pandemic, right? But for electronics, everything that we use or see or around us use electronics. They use electronic components. So that's why 2021 was ushered in by the demand for global electronics, new devices, new technologies, and the same thing with 2022. So that's why we've seen the resurgence, because we play in the global market. Now there's some, conservatism, if you will, for 2023. In fact, from our target of 10% in 2022, we're probably going to lower that down to 5% as indicative of the global demand for electronics components.
Okay, are you still seeing our competitive side here or edge compared to our ASEAN neighbors when it comes to exporting electronics? To what extent have we been able to maintain our competitive edge?
Well, sad to say, we've actually lost that edge with incentives rationalization. And let me expound on that further. CREATE was actually very good for local companies in terms of reducing the corporate income tax. Unfortunately, the incentives rationalization basically did not help address the high operating costs in terms of logistics, power, and even labor. And so we were hoping that the incentives would continue to kind of negate those high operating costs. But we can say that the proof is in the pudding. You can see that our ASEAN neighbors are really garnering or cornering a lot of the FDIs, specifically Indonesia, Vietnam, Thailand, and Malaysia. They're really very aggressive in terms of providing incentives and attracting foreign direct investments. And we're losing out in that arena, I believe.
Was this not circumvented by, of course, the present administration and the president going all around the world and directly pitching for foreign direct investments here, sir?
Well,
any concrete, plans that you've been hearing in this industry?
The new administration has actually been working hard in terms of getting the investment pledges, but for our industry, there's been a smattering of some expansions, but the concern still is at the end of the day, the multinationals will look for the site, the country, which will allow them to operate at the least cost cost per unit. And I know we're working with DTI and the new administration, and even DOF. We have a meeting with Secretary Diokno this Tuesday to see how we can improve our competitiveness in terms of foreign direct investment. So the dialogue continues, and it's going to be a collaborative effort. In fact, we're looking forward to the presidential visit to Japan. As you know, one of our biggest sectors here in terms of investments would be the Japanese, and we hope to get more pledges, if not actual investments, from Japan.
Okay, sir, and final question before we let you go, just give us an update compared to the times that we've had you on the show, that you were mentioning that there were some companies that might be leaving the Philippines because of this rationalization. Can you give an update on whether they managed to stay, or they're weathering out the storms in terms of incentives being taken out, and if there are new interests coming back in?
I guess let's rephrase that. Instead of incentives taking out, I guess it's more of a shortening, or during the transition period, shortening the 5% GIE to 10 years now, 9 years. The good news is that, there haven't been significant or even new companies that have announced they're moving out.
Okay.
The concern still is we're not seeing as much investments in new products and technologies. And for our industry, that's critical, because if we don't run new products, then that means we're going to be running legacy products. And when those products become obsolete, then what do the multinationals do with their Philippine factories, right? So the effort that we're making with the new administration is just to assure investors that we're open for business, and we're going to do everything we can to reduce operating costs, and the Philippines is open for investments.
All right, so we've managed to let them stay here, but of course, innovations needed and more investments in the new technologies as well. The dialogue continues there. Thank you so much, Dan Lechica, President of Semiconductor and Electronics Industries here in the Philippines.
Thank you, Danny, and your viewers. God bless you. Bye.
We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Danny Laurel. Heads up, motorists, oil companies are set to implement another round of fuel price hikes this week. Effective tomorrow, January 31st, gasoline will be pricier by 1 peso 30 centavos per liter. Diesel prices, on the other hand, will see an additional peso per liter, while kerosene will be up by 1 peso and 35 centavos per liter. This marks the third straight week of hikes for diesel and gasoline. SMEC Philippines, a unit of Singaporean infrastructure and urban development consultancy firm Surbana Jurong Group, says it wants to play a major role in the operations and management of the Ninoy Aquino International Airport. SMEC says it is now preparing its expression of interest to manage the technical aspect of NAIA's O&M. The company is considering rehabilitating the runway and airport facilities, especially after the New Year airspace shutdown. SMEC noted that its parent company Surbana Jurong Group has been involved in various airport projects. This includes the expansion of Singapore's Changi Airport. SMEC is also involved as a consulting services provider in San Miguel's Bulacan Airport. Beginning next year, foreign tourists visiting the Philippines will get a VAT refund. Malacanang said President Bongbong Marcos approved the tax refund plan to boost visitor arrivals in the country. The palace said the president will issue an executive order to implement the VAT refund program in 2024. The president also gave the go signal for the rollout of e-visas this year, prioritizing China and India. These moves were recommended by the tourism sector group of the Private Sector Advisory Council. The country aims to welcome 4.8 million foreign visitors this year. That's almost twice the 2.65 million figure in 2022, but is still lower than the pre-pandemic level of 8.26 million. And on to some global updates. Investors have little confidence in U.S. stocks even after this month's rebound. Bloomberg Quick Takes Scarlett Fu looks into the reasons why, drawing on highlights from the latest MLIV survey.
New year, new fears. Investors are bracing for stocks to fall again, maybe below the S&P 500's October low, as concerns over an anticipated earnings recession become just as important a driver of price action as whatever Jay Powell and the Fed decide at their January policy meeting. That's according to the latest Bloomberg survey of professional and retail investors. More than a third of respondents believe that the U.S. equity market won't finally hit bottom until the second half of 2023. Roughly the same proportion see it happening sometime before July, while only a fifth of market watchers are more glass half full, convinced that stocks have already bottomed out. So much of it depends on inflation. 9 out of 10 respondents see the rate of inflation continuing to fall, but still staying above the Fed's target of 2%. The question now is how companies manage through this combination of persistent inflation and an economic slowdown. How much more can they raise prices on customers? How much of their profit margins will they sacrifice? Will they cut more jobs like the big tech firms? In the coming week, Apple, Meta, and GM are among those reporting earnings and sharing their outlook that'll help set expectations for the rest of the year and dictate sentiment. Until there's more clarity from companies and the Fed, the majority of respondents say they will hold rather than buy or sell their existing positions in U.S. stocks.
For more updates, visit News 5, The Philippine Star, and Business World Online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 2 p.m. We are One News, all sides, all the time.